What's up, everybody? This is Antonio here to bring you another episode in the series of how many shares of a certain company do you need to own to make $1,000 a month, $100 a month, and even $100 a week. So in these videos, I do go over the company. We pull it up on Seeking Alpha, look a little bit about the company profile, look at the charts, then pull up the dividend scorecard, look at their dividend, and then we pull up the calculator, crunch the numbers, see how much you need to own to make the $1,000 a month, even $100 a month, and also $100 a week. And then we wrap up the video by looking at the dividend yield, showing us when the best opportunity is or was to enter the stock for the dividend yield. But in this episode, guys, we will be actually going over, or at least finishing up, the last company on one of my subscriber suggestions, which is Citi. So this is a list I do have. If you guys want me to add another company to the list, I'll be happy to do so. Just let me know in the comment section. Try to make it a company that hasn't been I haven't covered, or it has moved quite a bit in stock price or dividend yield. I'll be happy to retouch bases on that. But yeah, in this video we will be going over Citi. So let's go ahead and pull up Seeking Alpha. So you'll see it's Citigroup Inc, ticker symbol C. Currently trading about $42.37. Let's go ahead and look at the company profile. So it does say Citigroup Inc is a diversified financial services holding company, provides various financial products and services to consumers, corporations, governments, and institutions in North America, Latin America, Asia, Europe, Middle East, and Africa. It operates through three segments: the institutional client group, personal banking and wealth management, and legacy franchises. The ICG segment offers wholesale banking products and services, including fixed income and equity sales and trading, foreign exchange, prime brokerage, derivative and equity and fixed income research, corporate lending, investment banking, and they do a lot more, guys. But you could click on the more if you were interested in reading a little bit more about them. But they are in the financial sector. Their industry is a diversified bank, so they are a bank typically on the same level as Wells Fargo, JP Morgan, Morgan Stanley. The employees, they do have 240,000 employees. They were founded back in 1812, which is a long time, guys. But you can actually visit their website at citigroup.com. I do have their credit cards, which is fairly interesting. And then if we actually pull up the charts here, we can look a little bit about them. On the year to date, they are actually down 7.45%. On the 1 year though, they are down 13.53%, and then on the 5 year, they are down 39.60%. Pretty bad for 5 year return there. 10 year right there, they are down 20.74%. So back in they were trading around $80 or so back in 2016 or so, and they've just been on a downtrend. Pretty bad return for 10 years there on the total return since they've been, I guess, publicly traded. Back in 2008, I know they had a huge hit back in the Great Recession. They were trading around $485, guys, and that's a huge downturn there. And you'll see that they're just way down. So pretty horrible return there if you were invested about them back in 2006 to 2008 and you did not sell. But if we look at the 52-week range here, guys, 52-week low is $40.01. 52-week high is $53.23. So they're trading closer to the 52-week low. EPS is 5.77. PE is a 7.34, and then dividend rate is $2.12, and then yield is actually a 5%. Market cap is at 81.59 billion market cap. If we pull up the actual scorecard, again, they are in the financial sector. If we look at the dividend yield, it's a 5% dividend yield, and then annual payout, they pay you $2.12 for every share you do own yearly. Payout ratio is 33.89%, so they have quite a bit of room to grow that dividend. On the 5-year CAGR, they are at 7.88%, very close to the double-digit 5-year CAGR. It's showing that there's no dividend growth. I'm not sure. I know Seeking Alpha has been known to have this incorrect, but let me know in the comment section if they do have a dividend growth there. And then on the amount, they do pay out quarterly, which is 53 cents every quarter. So every 3 months you do get paid 53 cents, and I would assume that they would grow their dividend, especially because they do have a pretty decent 5-year CAGR. But anyways, let me go ahead and pull up the calculator and we can start crunching some numbers here, guys. So let's go ahead and figure out how much you would have to own to make $1,000 a month. This is typically a good amount. Of course, you'd want to have diversification in other stocks, because you wouldn't want to be just invested in one stock and then that tanks. How you guys saw that Citi was actually trading around $485 back in 2008, and now it's trading around $40. So definitely gotta be cautious about that. Diversification definitely does help with that. But anyways, we want to make $1,000 a month. There are 12 months in a year, so annually we do need to make $12,000. You can actually take the annual payout that they do pay out, so which is $2.12, divide that by the 12,000, and this is actually going to give you the total number of shares that you need to own, which is 5,660 shares, and you'd roughly be making about $1,000. If you multiply it times the current share price, which is $42.37, you'd roughly need about $239,830 to invest, and then you'd be roughly making about $1,000 and using Citi every single month, of course, assuming that they don't cut the dividend. But a quick way to calculate this is take the 12,000 you need to make annually, divide it by the dividend yield here, which is 5%, and then you'll see that's right around $240,000 that you'd have to have invested. One way, let's do the next one, which is $100 every single month. This was a little bit more achievable because it does require a lot less capital, but you can actually take the previous answer divided by 10 and that gives you. But since we do have the calculator, let's go ahead and crush those numbers so that people can see the math behind this. So $100 is what we want to make monthly. There's 12 months in a year, so annually we need to make $1,200. Again, divide this by the annual payout, which is $2.12. This gives you that we do need to own 566 shares of this, and you'd be roughly making about $100 a month, meaning that since they do pay out quarterly, you'd be making about $300. But that's okay. And then you can actually just multiply this times the current share price, which is $42.37. You'll see you really kind of have to have about $23,983 invested in this at this current share price. A quick way to calculate this is, again, take the 1,200 you need to make annually divided by the dividend yield, which is 5%, and you'll see we roughly get about 24,000. So that's a quick way to calculate that. Let's go ahead and do the last one, guys, which is $100 every single week. So we want to make $100 every single week. There's 52 weeks in a year, so annually we do need to make $5,200. Again, you guys already know annual payout is what we need to divide it by, so $2.12. This gives you the total number of shares, so that's 2,452 shares. Then multiply that times the current share price, which is $42.37, and you'll see that we have to have invested about $103,926 to be roughly making $100 a week. That would be pretty sweet. Imagine every single week you have an additional $100 to spend, or in your retirement use to pay bills or groceries or whatever you need. But a quick way to calculate this is take the 5,200 and divide it by the dividend yield, which is 5%, which is about $104,000, what you'd have to kind of invest to make that $100 every single week. Again, if you are investing for the long term, you do require a lot less capital because companies do grow their dividend every year. Of course, this is if you're in solid great dividend growth companies. They do grow their dividend over time. The dividends get reinvested, and that dripping just takes effect, the compounding. And I'm seeing that in my dividend growth portfolio, so definitely be sure to follow me. But if we wrap up this video by looking at the dividend yield here, guys, this is the dividend yield that keeps fluctuating. So you'll see back in 2019 they had a dividend yield of like 2%, 2.5, fluctuated closer to the, I guess I was getting close to 3%. And then back in the crash of 2020 during the pandemic, it did spike up all the way to 5%, 4%, and then slowly went back down to 2.5%, and then started going back up. So potentially the share price of this has been going down further. So it's actually trading closer to back when it was trading in 2020 March. So might be a great opportunity. Of course, if you believe in this bank, you definitely want to do a little bit more research, because that huge drop back in 2008, 2011 or so was a huge drop there, and you want to make sure you want to retain most of your capital appreciation, and not just because it's going off dividends, because they could cut your dividends at any time, and that does tank the share price. But anyways, guys, this is actually all I have for you guys in this video. Let me know in the comment section if you guys are invested in Citi, and yeah, don't forget to subscribe with that notification. Help me reach that 20,000 subscriber mark as well. If you wouldn't mind dropping a big thumbs up on the video, definitely goes a long way. Definitely appreciate it. I will talk to you guys later. Take care, stay safe out there. Bye, guys.